Hi, Ben Kingsley here, and welcome to another edition of The Story Behind the Numbers. Now, if you're not familiar with what we're doing here, this is where we get in and we actually start to tell the individual stories of each of the clients that we're looking after from a property planning and also the types of properties we're buying. Now, I start off this by talking about the overall activity for the month. So I'm going to go with October first. So in October, we delivered 38 property investment plans for new clients coming to Empower Wealth, and we made recommendations inside those plans to purchase around $67.5 million worth of property. Now, that's not all going to happen today. That's over the journey as they try to build out their passive income for life. Also in October, we were very busy in the buyer's agency team where we bought 33 properties. We did miss on 8 other properties because remember, we will walk away if the deal doesn't stack up for our clients. So we bought around $19.8 million worth of property in October. Now in November, we're also very busy in the property wealth planning team where we delivered 42 further plans, and we had recommendations inside those plans of $64,500,000. And then rounding out the broader numbers from the buyer's agency point of view, we bought 13 properties to the value of $8.6 million. And more of a difficult month, we did miss out on 6 properties in that month as well. So they're the broader numbers, but again, this segment is all about us putting the story in, telling the people around their challenges, what they've overcome, the transformation that they're having, without giving away their personal details, but hopefully those stories can relate to you. So let's move on to our first story that we want to tell, which comes from our property wealth planning team, which was a plan delivered in October. So this is a story of one of our clients who work with Brendan, who's one of our qualified property investment advisors. And I've themed this story, and I'm being a little bit critical here, but blowing the cash, wasting the money story for me. So before they came in and we got them all sorted out. So backstory is mid-40s couple, Melbourne-based, Circa income around that 150 to 200. Bryce actually bought one of their properties for them prior to getting a plan done a few years back. And so that's a good story. Melbourne-based clients. And in reality, theirs was a story of surprise around just how much money they were spending and how much money they weren't putting away. So this plan is about probably 4 savings for them. So no kids. They had no kids on the agenda. They were looking, the big rocks in the jar for them was about early retirement. There was no need for any future legacy. So we didn't have to factor in a lot of those costs associated with that. But there was some training that needed to take shape. So there was some education that needed to occur. And that was done through Dean in our mortgage broking team, who sort of educated them on, based on their current spending, they weren't going to be able to borrow much at all. So they needed to rethink about their discretionary versus essential spending to at least allow us to go to a lender responsibly and provide them with the loan that they needed to secure their first investment property. So they were definitely overspending, and they needed to get some training around how they were overspending that money and that their money wasn't working hard enough for them. So serious adjustment took shape. They took that information on board. The transformation went from very little clues around managing their money and lacking direction to now having clear idea, the right pathway to move forward. And we're seeing them buy 2 investment properties, only 2, building up that wealth over a course of time. They want to retire in their mid-50s. So once we build it up, there will be a sell down strategy attached to that. And we're looking to target a passive income of $100,000 a year for that couple. So I think that's a different type of story where it's one of not organising their money, not getting their circumstances sorted out, going on an educational journey first, and then coming back for show us what our potential is, and now they're on a pathway to realising that potential. So I think that's a great outcome. We're able to get them the finance, and also start to get them on their pathway to buying 2 quality investment properties, and they can get on with their life, but using money smarts to organise their money on the My Wealth Portal platform. So I think that overall speaks volumes for what this couple is going to do in transforming their situation. I want to share this story with you, which comes from Rachel Cole, who's one of our qualified property investment advisors out of our Sydney office. Now, I've themed this story simply as aggressive. We have an early 30s couple, no kids currently, very, very high income earners. So they are absolutely smoking it, getting on with earning a very, very high income. Now, they came to us with 5 existing properties before they wanted to build a plan with us. Now, the realisation when we reviewed those properties is that 3 of those properties weren't so great. They were what we would call underperforming assets, off the plan style assets. So some difficult decisions need to be made. Now, this couple are willing to just wait and see with those particular properties because of the income that they're currently generating. Now, big rocks in the jar, we're talking about a $2 million family home, of which they're going to buy and then potentially rent out, whilst they also may spend some time overseas as part of their career. So very career focused, and that's why they worked out that they are super time poor, and some of the investments that they were making, they were being misled because what you can find is the spruikers like to get into these channels of people who are high income earners and say, we can reduce your tax, we'll get you these properties, you won't have to worry about them. And when you're earning such high incomes, you know, the level of tax deductions that they can get are somewhat enticing. That said, if you don't get the capital growth, or if the value doesn't come in at purchase price, then ultimately losing money to save a little bit of tax is not very smart at all. We ultimately want our properties to be outperforming properties. We don't want them to be underperforming properties. So very much a focus on go hard, retire early, and we're in a position where we can look at how we plan out the owner-occupied and how we look at the downturn in the market in Sydney at the moment to see where there's an opportunity to strike on that property, and that's the plan. Then there's 2 more investment properties after that in the next 7 years, and the overall result of that is we're looking at a retirement date of 2038, age 50. So shows what can happen. Obviously, when you've got very, very high incomes, there's a means by which you can accelerate your outcome, and a passive income, a very impressive passive income of $150,000 a year. So aggressive, but probably taking action without knowledge, in sort of getting maybe misled in regards to some of the advice they've had with the current portfolio that they've got. But we really want to sort of bed down some real quality assets, get that big rock in the jar in terms of that owner-occupied home. So for me, this is a story of focus, direction, goal setting. They're going to do that now. They're going to listen to Rachel in terms of how they execute, and they're going to go and shop to find those outperforming properties. And I have every confidence in this couple being able to build out their story and retire early as they'd hoped to, with some right professional advice this time around. In this story behind the numbers, I've themed this one step by step. So it comes from Matt Skian, one of our great buyers agents in the team, and step by step, because this particular couple had a lot of cash. They'd built up a very, very nice nest egg. They'd been working hard, good money managers, and they wanted to put that money to work. And whenever you get someone who's investing for the first time, there's a real, well, any time really, but the first time around, there's a real, chance to be able to build trust and take people on a journey and build out that education, because you want to be able to make sure that you've got their confidence that you're going to pick the right asset. And when you've got people who are very detailed, that's when it's going to take some time. And we love detailed people, because in our business, we're known for detail. We're absolutely known for, the amount of detail we go to in cash flow analysis, in the research that we do, in all of the parts of the process in our business. So we get delighted when those people entrust us with their money. And this couple, who are based out of Sydney, gave us a Melbourne brief, which we were very happy to take. We call the process a slow and steady, build that trust, get that detail right. And so the bottom line is that Matt was able to buy down Bayside Way. He's bought a really safe and reliable asset down there, a brick solid home, incredibly neat and tidy, on a good patch of dirt, 687 square metres of dirt, 3 bedroom, 1 bath, rented straight away, nice yield, 3.4 for the price point. It really is a low maintenance, and there's potential for future value add on that particular site as well. So the transformation here for me is that first property, just like every property, but that very first one, you get that first one away, and then you realise that it doesn't impact your life. I remember my first investment, you're sort of watching it for the first 3-4 months, maybe 6 months, and then you just get back on with your life. And I think that's what's going to happen for this particular couple. They're going to be able to build more confidence out of making this particular purchase. And for me, that's then about giving them the confidence to step forward with their next purchase. So step by step is the process. Purchasing property is a process. It's not an event. Build up that knowledge, win that confidence, be entrusted to make the right execution. Matt did a great job here, and we've got some happy customers who have got their first investment property. There's a lot of lessons in this story behind the numbers. I'm theming this story same page. So what happened, and this is Nicole, one of our great buyers agents here in Melbourne, who was dealing with some clients who had done a property plan with us through Damien. They're sort of mid to late 40s, professional couple, very time poor, couple of kids, Sydney based, but again, looking to buy down in Melbourne. And what we saw here was a situation where one person was the primary contact, but potentially the other person in the relationship was the major decision maker. So if you have a misalignment in what they're thinking, what should be bought, and you're dealing with not the decision maker, it can be really difficult. So, Nicole was able to learn that she needed to get both of them on the same page to be able to get the result. And early on, we weren't getting that result. So we were presenting properties, and those properties weren't necessarily meeting the brief, and it was confusing because we thought we had the brief right. So it was one of Nicole's longer assignments that she had to do to be able to get a result for this particular couple. But I think the end result here speaks volumes of, making sure you're having that open dialogue and you're talking about what's working and what's not working. And Nicole is fantastic at reading the play in terms of whether we were on the right page or not on the right page. So there was some direct feedback which was given, and that allowed us to get that brief right again in terms of what we were looking at. So one partner driving the conversation, the other one a little bit more conservative, listening to a lot of the market noise, which is very relevant when you're in a market downturn. It's only human nature that you feel that way. But if you lift your eyes and you're playing the long game, you can understand that property is a fabulous long-term investment. It's an essential shelter. So a great brief here. We went shopping. We got a great little cottage, a weatherboard cottage in Footscray, corner allotment. So really, really good. And the story of the negotiation here for Nicole was really a great one, because it was passed in at auction, and we just waited and we waited and we waited until the vendor adjusted their expectations and came down to the offer that we put forward. So from that point of view, we were able to get them to come down. So it was a good negotiation. It wasn't rushed. And that ultimately led to a great result. That property is now rented out. We're talking purchase price of around $850, getting $520 a week, so a 3.2% gross rental yield. It rented on the first open, so we know that this area here is very good for long-term prospects. A good allotment of land, corner block, future opportunity. So I feel that this Sydney couple are going to look back on this journey and learn in terms of more about what's important to them, get the brief right, get on the same page. And I suspect, based on the fact that we've got a plan for them to buy more properties, that the next purchase is going to be that little bit easier, and we're going to understand from our end that we get that brief right. So there's lessons on both sides here, and I really like that story, because for me it's a story of turnaround. You know, we've been able to get that sort of not on the same page into a turnaround scenario. That's been done. We bought a great little asset, and that's a good news story all round. The story I'm about to share with you now is I've sort of pigeonholed this story as showing the clients the rest of the way. Now, it's not very often that we compliment people on phenomenal money management, but it was pretty clear that we had some really superior money managers in this particular story. That's a story being told by Stuart Bartram, one of our qualified property investment advisors out of our Sydney office. Now, this is a pleasing story for me because this couple had done an incredible job of paying down debt, trapping surplus money, a good savings story. They've got a couple of kids. They live out of Sydney. You know, household income in that sort of 150 to 200 range. And their big rocks in the jar were about that dream home. So making sure we could fit that dream home in there. They already had an owner-occupied property and an investment property. But their story was also about legacy for their children. So a couple of kids, they wanted to make sure that they could provide for their children both today, but build out that family wealth over the journey. And I think they've done terrifically well, but they hadn't actually benchmarked themselves. They were surprised just how good a position they'd put themselves into by being great money managers, by having that delayed gratification story. And that just has simply meant that from now on, all we've got to do is buy 2 more investment properties. That's all they've got to go, right? And overall, they're going to have 3 investment properties. They've got their one. The big rock in their jar was the dream home. We'll make sure that that's sorted out and is also included inside the plan. So they realised better position than they thought. They're going to retire. They love work, so they're going to retire in their early 60s, but they're going to have a passive income of $100,000 combined with the 3 investment properties and also their super. So they are going to be self-funded retirees. They're going to find financial peace. By showing them the final pathway forward, they were able to be validated to move forward. It was a really simplified plan. It was clear purpose. They've now got everyone on the same page. And again, for me, I love these stories because they're a whole of wealth story for us. So we've been able to build their plan for them. We've organised their mortgage refinances, and we're going to buy the property through the buyer's agency team. So that's a real solid story to be able to say, congratulations on what you've done so far. You've now got trusted advice to take you on that final part of the journey, and we're going to hold hands in terms of taking you through to that final stage. So I love that story. Congratulations to this couple for putting themselves in such a great position, considering their household income is not, for Sydney, is certainly not excessive. They're going to really enjoy the fruits of their labour in retirement. When I share these story behind the numbers, it's really grateful for me to be able to get an opportunity to look over some of the plans that we are developing for our clients. And you get these stories that need to be told. Remember, we're doing anything around 40 plans a month. So we can't tell every story. So every one of them are unique and great, and it's just a joy to be able to be given that opportunity to help those clients go on their journey. But some of them just jump out at you, and this is one of those stories. A young IT couple out of Western Australia. They're working with Paul Thompson, one of our QPIAs here in Melbourne, 20 years old. 20 years old. And they've built themselves a property portfolio plan. They came across us through our educational content, the books, the podcasts. They flew into Melbourne to have a meeting with us. And they're just a delight. And the theme for me on this one here is never underestimate the power of goal setting. This couple are driven, they've set their goals, they are going to have an amazing result. Starting at the age of 20 with the power of compound, they're going to have future choices, they're well and truly going to have an amazing self-funded retirement, and they're highly motivated. They can see the picture in front of them. So you set the goal, they chase down the goal. And here's some of that story. Going to take a break at some point on this journey. So a trip in 2021, 6 months around Australia. Tick. Then medium term, a little bit older, they're going to have a couple of kids. Okay? But they're going to buy 3 investment properties before they start their family. Imagine a situation where you could effectively have a nest egg that's so life-changing like this couple is about to embark on. So very, very good money managers, but you're probably asking 20, how did they save for their deposit? Great question. They actually didn't. What they're getting is a family pledge, a security pledge from their parents to get them started. And this will be the norm into the future, because that is the biggest challenge for young people getting started. But if they've got parents who have got a property, then it's using that equity to be able to get them started. So again, we're not talking about buying, 20, 30, 40 properties for this couple. They also just want to, move. Maybe there was talk. I did have the privilege of meeting them briefly when they were here in Melbourne, and they were talking about more opportunity by moving into Melbourne or Sydney because they were IT focused out of Perth. But simple, retire at 55 years of age. They're currently 20 now, $2,000 a week, $104,000 a year passive income. They're smoking it. They're ready to go. We've lined it all up. They're using all of our professional services. So they've got their plan, they're getting their mortgages organised, we're getting that guarantee sorted, the security guarantee, and they're going to execute. And they're borderless. They get it. They understand. They don't need to be in love with the property. It doesn't need to be an emotional attachment to the asset. They want a performing asset that can set up for their second and set up for their third property. Then they'll buy their family home. They'll start to look at having the children. Those types of things are a really great story. So all kudos to this couple for starting as early as they are. And that's what I said before, never underestimate the power of focus and having a goal and planning to become what you plan to become. The next story I want to share with you is around getting on the property ladder. So this particular person, a single person here in Melbourne in their early 20s, is again not listening to the noise, not trying to worry about overcoming the challenges, has done an excellent job in saving, so has foregone probably a few late night memories and drinking memories to put a bit of money away. And they did a plan through Joel, so a property investment plan through Joel. They've done their lending through Thomas here in the team in Melbourne, and Nicole Slade was their buyer's agent. And we pivoted a little bit on this brief. Originally, this one was going to be a rent vesting property, but with the incentives that are on offer for first home buyers here in Melbourne, we decided in terms of what that brief looked like, that it may be better to buy the first home, take advantage of the first home owners grant, live in the property, but down the track, maybe move out of that property until they find their future partner and be able to get that more significant home and that future place of residence. So I like this story. We had a good budget. and the budget was around that sort of 600 to 660, so right in that sweet spot for first home buyers. The brief was originally we were happy to be borderless, but because we were going to live in it now and take advantage of those stamp duty concessions and those incentives, we stayed put and bought in Melbourne. It was certainly a great collaboration between the team members, everyone on the same page in terms of what that looked like. So ultimately what we were able to buy is a freestanding house on 600 square metres of dirt in Frankston Central. You know, what can I say about this one? One of the best pockets of that area, really a quality buy, you know, because of the opportunity to rent it out. So it was already had tenants in place, it was rented. So what happens for this particular client is they have to move into it, remember, because if it's your first home, you've got to move into it within the first 12 months. But this is rented out until April. So he's getting a little bit of extra rent, he's saving up a little bit of extra money, so by the time he gets in there, there's going to be more money in his offset account, in his primary account as we call it, under the Money Smart system. So I just can't speak highly enough of this opportunity. He ended up only paying $8,000 in stamp duty instead of what he would have paid $25,000 as an investor. So that's money in the bank, pays for some of the professional advice he's got, and the block is subdividable down the track. So there's real value add here in terms of being able to equity harvest. And that second property in his plan could actually be on the block of land that he already owns. And if you think about then how much that's going to be yielding, that's going to be well and truly positive cash flow, some good depreciation that he's going to be able to enjoy. So he's adding value to be able to enjoy that. So terrific result for Nicole and for our first home buyer here in Melbourne. Another great story that I was very, very happy to tell. So it's been a busy couple of months in October and November here in the property division of Empower Wealth. And you can see by the activity from both our property wealth planning team and also our buyers agents who are getting out in the field and finding those gems. I'm looking forward to telling you about the December and January story behind the numbers, which will come out in early February. So watch this space for those stories. If you want to check out more of our story behind the numbers stories, just go to our website. They're all there. We want to make sure that you can relate to those types of stories. So hence we're putting some ideas and some themes around them so you can potentially just watch the ones that are most important to you. But you know, ultimately this is all about hopefully giving you the confidence to take that next step forward and looking to take an opportunity in what will be a very, very good buyer's market in 2019. Thanks for watching.